very interesting day once again on Capitol Hill on the heels of just a week ago, the TikTok hearing. Now, Seana, it's interesting because we're going to talk a lot about further need for banking regulation. I just can't help but think we needed this hearing in about 32 days. After the report from the Fed is done, most of the questions that we need answering will be answered eventually by that report on what happened. And we need these people dragged back in front of the Senate. That's when some true answers will come. Is there need for further banking regulation? That's not entirely clear. It seems that this really had nothing to do with the rollback of Dodd-Frank in 2018. And we're going to talk to Cynthia Lummis, Senator from Wyoming, in just a bit about, look, they had the tools in place to regulate this, but just like the high inflation we're suffering from today, the Fed was late to the party. They were late to the party in beginning to raise rates. They were late to the party in seeing the true impact of those rate increases and not seeing what was happening right beneath their nose at Silicon Valley Bank, which I think both parties agree they should have seen coming.
Yeah, they should have seen. And of course, the lack of oversight, that was a common theme that we heard throughout the day. But clearly, there is a massive split on whether or not more regulation is necessary. We heard from Senator Warren, and she got all three of the regulators to agree that more regulation is probably necessary down the line in the wake of what happened at Silicon Valley Bank. Now, all three of those banking regulators, they did stress that there was systemic risk. Lots of debate about whether or not they should have acted, whether or not they should have insured all deposits, and the need to do that. Let's take a listen to at least their case.
Nearly 3 weeks ago, problems emerged at two banks with the potential for immediate and significant impacts on the broader banking system and the economy. The situation demanded a swift response.
Our best assessment was that we were seeing signs of contagion in the banking system that threatened to put at risk depositors and banks across the country.
The boards of the FDIC and the Federal Reserve voted unanimously to recommend, and the Treasury Secretary, in consultation with the President, determined that the FDIC could use emergency systemic risk authorities under the Federal Deposit Insurance Act to fully protect all depositors.
So regulators, to no surprise, backing up the moves that they did make over the last 2 weeks, 2.5 weeks, I should say, saying that it was very necessary. When it comes, though, to accountability, I think that is also the big debate. How much of this lands on regulators? How much of this really should be at the blame of the SVB executives who took that massive risk? And also what is going to be done to hold those executives accountable? Yeah, it sounds like the talk of clawbacks is not going to go away anytime soon when it comes to the bonuses paid out and the stock sale from the former CEO of SVB. And that quite frankly, is a conversation that needs to be had. Now, you mentioned Elizabeth Warren getting regulators to agree that further regulation is required. That's her answer to every problem in this country. Okay, let's clarify. Now, some on the right would say that no regulation is the answer too. So you just say that with the key caveat. We did speak with Wyoming Senator Cynthia Lummis, who was in today's hearing on the banking crisis. She had a different point of view on what federal regulators should have done. Let's listen.
I don't buy the notion that every time a bank fails, especially one like this that was mostly venture capital, risky capital, that we should bail them out. We did that during the 2008 financial crisis. Perhaps it was worth doing then, but I certainly don't think it's worth doing now.
Generally speaking, I happen to agree. In most cases, we need to not bail out big risks being taken. But Seana, we'll never know if a further bank failure would have happened in the wake of all this. My guess is absolutely 1, 2, maybe 3, but we'll never know. That is certainly a point of view. Did we need to backstop all those deposits? Is further backstopping of deposits needed? That is clearly the right's point of view on this. But I don't know that we'll have a definitive answer for that ever.
No, I don't think we'll ever really know exactly how this would have played out if the regulators did not step in. But it was very clear that there was stress within the banking sector, and that was evident when you took a look at the behavior in the stock price of First Republic, and PacWest, and Western Alliance, and the names go on and on and on and on. All the regional banks that were under tremendous amount of pressure in the days and frankly weeks following Silicon Valley Bank. So certainly there was a lot of concern out there about contagion, and exactly what, though, to your point, what that risk would look like, I don't think we'll ever know.
Yeah, and you can see the rest of our interview with Senator Lummis later in the hour. I did ask her what has been put in place or what needs to be put in place that assures that something like this doesn't happen again. She'll attempt to answer that question. I hope that that's the focus of the Senate. It didn't feel like it today, though.
No, certainly not today, but we'll see. This discussion really far from over.